Hello everyone, it's Alex here from Pro Trading Edge. In the last video we did a breakdown for this GBP USD trade from 1st of August 2023, and on the 1st of August GU attacked the sell side liquidity and then had a retracement here. So now we will go forward and I'm going to show you the trade that I have the day after it. So the reason for which I'm still looking for trades is because on the daily chart we are clearly attacking sell side liquidity and breaking the market structure here, and then we did that here, and we have the drawn liquidity here and also the daily order block and the middle of the order block, which is the mean threshold. And the mean threshold is going to show if the price action is going to stop in the order block or is going to continue to go lower. So if on the daily chart we closed below the mean threshold of the order block, that means that the price action is going to continue to go lower. If not, it's probably going to consolidate here in this area. So now the next drawn liquidity is going to be here in this area where we have a swing low. So I'm going to look here first before we get here. And now let's go on to the lower time frame. So this is the trade we had on the previous day. And on the 4-hour time frame from yesterday's price action, we have here an imbalance, a fair value gap that was left behind. So I'm going to note this for the lower time frame. If we go on the 1-hour time frame, we also have here fair value gaps, imbalances, and I'm also going to check from the swing high here to the swing low. I want to see where is the equilibrium on this price action leg, because if price is going to go down, I want first the price to retrace above the equilibrium and to touch this fair value gap. So we are going to see then how this is going to be touched and what is okay, what is acceptable and what is not acceptable. So for now I would like to put a line here because I would like to delete this fib tool because there are too many lines on the screen. So this is 27901, and to know what this is I'm going to write here equilibrium. So now let's go on to the 15 minutes time frame. So I start to trade at London, and when London session starts, I can immediately see that the price retraced above the 50% level and traded on the lower side of the fair value gap. You can see that here is the middle of the fair value gap and it just touched that with a wick. What I don't want to see here is price closing above the middle of the fair value gap and then starting to trade on the upper side of the imbalance, because this means that it finds support on this imbalance, so it's going to start to trade higher. But in this case we are okay here as long as we stay below the middle of the fair value gap. And at the Asian session I see some impulsive price action going downwards, then I see a retracement. Let's go on the 5-minute chart, and then again here I see impulsive price action going down. So it kind of looks like price is reacting to this fair value gap and it's going down. So it would be the same if you will have the 1-hour fair value gap, it will be kind of the same. In here I liked also how it reacted here right at the bottom of the fair value gap. So you can see here this is 27953 and the high of this candle is 27953. So it's exactly reacting at the bottom of this fair value gap. But what I don't like here, so when London starts, the price starts to trade up. So there are no major turning points here like we have this fair value gap. There is nothing on the 1-hour chart here. So if you go on the 1-hour chart, I don't have any imbalances here. If I go on the 30 minutes chart, yeah, there is some imbalance here, but it's not that important. So what I don't like here is the fact that we have all of those highs going downwards. So this is like some kind of trend line going downwards. And I know that many times London session, it's kind of sneaky, it's tricky. So even if it goes up before it goes down, and it does that straight from the beginning, I know there is a possibility that it's not going to continue to go down and that New York is going to make one more run upwards, and then it's finally going to go down towards the sell side liquidity that we've seen from the daily chart. So here, so if I zoom out and I see where we are going to get is here. So this is pretty far away, and we also have the order block, the daily order block with the sell side liquidity here. So this is pretty far away. It's not going to go straight here. And this is also pretty far away. So I'm not thinking that it's going to go straight here, or at least not that easy. And I'm also looking at the fact that if it went down like that, and it's just the middle of the London session, we're also looking at time here. So it has a lot of time to go again up and then to sell off. So there are two approaches that you can take here. One of them, it would be to wait to see what London does and wait for New York. And the second one would be to trade and take a loss and then regroup and re-enter at New York, where that loss is going to be recovered. So in here, London goes up. I have a swing low here. I can say that this is a break-in market structure, but usually I like to enter before price action reaches a swing low, like the sell side liquidity here. And you can see that it doesn't give any other opportunity to entry. So the only opportunity it would be at the retracement after this price leg. So if I measure that, what's 50%? It's around here. It's above the opening price, which is what I also look at to buy above the opening price when I sell. And we see that the price action actually goes up to take out some highs. And the question is, which high is going to take out and stop at before it would definitely sell off and go down. And I can say that it would be okay to take out this high and this one here, but I don't want the price action to close above this high if it reacted like that to the fair value gap. But I don't want the price action to reach the middle of the fair value gap again and to close above it. So if you do go there, I would not try to enter short here, because it means that something is wrong. Something else is going to happen. So in here, this is still London. So if you take a trade here, you get stopped out. If you do not take the trade here and you wait, because you can go in here and I can have my stop loss above here, but this is a long stop loss. So you can do that as a beginner to see what happens having a wide stop losses, because when you do a stop loss, you need to respect the range. So this is the range where it's unsure what is going to happen. So here we have London. So London session is going to finish around here, and then New York session starts. And I like how price respects the fair value gap here. You see just wicks going inside, no body closing above inside the fair value gap. Here we have the New York session starting, and here at the beginning of the New York session, I'm looking at what we have. So the price went up, it took out this high, it took out this high here, and it didn't close above this and above the line, so that's good. We traded above the equilibrium, we traded above the opening price. We don't have a break in market structure here, but we have a lot of signs that price is going down, that breaks the market structure. And we have here some swing lows that formed, and the market has broken those. So we can take those in this case. So what I would like to see here is at least price rising above the 50% level. And I don't want to see it closing above the 79. So between 50 and 79 I can go in. The higher I go, the better the entry is going to be. So 62%, it's usually a level that I like to go in at. And I like to see that level reacting from something. In this case here we have those three candles going up, so this is like an order block. So this is like an optimal trade entry. So here, if this is the time frame where I go in, I like to see price going up, and then I like to see price reacting with a strong candle, and that's the moment when I'm going to press the button and go in. Of course, in this case here I have to wait because it's New York haven't started yet, so I can wait for another candle. So I'm going to go in here, and I want to position the stop loss right above the swing high. So it doesn't work here to protect the trade even more, like to go above here and above the middle of the fair value gap, because in this case, if it's going to continue to go up, it's going to go up way more, taking me out anywhere I would have my stop loss. So I want, in this case here, the best possible entry. So it's going to be above the swing high here. And because this is a wick, I usually like to keep it, to cut a few wicks and just keep it above the lower side of the fair value gap. Take profits. I have here this swing low from where the price started to retrace upwards. So this is going to be take profit 1, and we are going to see how I'm going to leave the runner. And we need to remember here that I still had a runner going from this yesterday trade. So now my daily risk is reduced because I have already a portion of older trade on the market. So if I have 30% of the daily risk on that trade, now I can put maximum 70% of the daily risk on this trade. So I'm not going to use the same risk, obviously. And now from here, I want to see what is going on. There are some news at 8:15. So there are high impact news, but if I see the price going down like this immediately, I'm not going to be worried about the news. And in here, we can see how price had impulsive price action going lower. And there is this small candlestick here. So this is a sell range or an order block. So we see how the price retraces right up into this sell range, this order block, and it reacts there and it starts to go down again. So I like to see that. This is called order flow. So I like to follow that because those are confirmations that the trade is going fine. And at 8:15 we have a powerful reaction attacking the sell side liquidity here. And this is also the take profit 1 for our trade. And the final take profit for this one is going to be this sell side liquidity here, which happens in another day. But so far, New York session is going great here. And so you can see why you have to take profits. You have to take partial profits. And you should not get greedy with sell side with liquidity that it's far away, because price action does this a lot. So it goes very close to a target and then it starts to retrace. And many times I take profits when I'm that close because I see some reaction here, and we are always looking at time. So it's the end of the New York session. So before the end of the New York session, I want to see the price action going strong through this sell side liquidity. So I want to see it attacking it aggressive and fast, and after that working below it, maybe going above and below. But if I don't see that, I don't like it. So usually this is enough for me, so I can close the whole trade very close to this one. But in this case it's not necessary because I'm looking, this is a runner and I'm looking to go forward, and I already taken profits here. And I didn't take the trade at London because I didn't like this trend line here. But if you take this trade and you take a loss, this is going to be recovered here. And we can see this case here. So the price retraced here and overnight it went into a very tight consolidation. So I like those type of consolidations. And in the next video I'm going to show you here how and why I had a shorter trade at London. And we can see here how price went down. It even had an aggressive attempt here to attack the sell side liquidity and touch the order block, but it didn't. And as I explained in the previous video, because of the reaction here, this is the place where I closed all the runners. So this runner and this runner, and the profits here, even if it's just 20 and 30% of the daily risk. So there is a total of 50% of the daily risk, and those were pretty good. So they were around 9 risk to reward ratio. But this is only possible with taking profits 70-80% of the trade very fast inside the session. So this is intraday trading. And if you're going to do this, you're going to be comfortable to leave the runners going. So those are good trades. Many times I have the runner coming up and taking me out at 0. So that's okay because I already taken profits. But sometimes the runners, they keep on going. So you make a lot of profits with them. And this is the trade from the 2nd of August. In the next video, we are going to look at a shorter trade, more like a scalp, that I had on the 3rd of August. So I hope this was helpful and see you in the next video.